everyone, and welcome to the latest Global Outlook video from Economist Intelligence Unit. My name is Agathe Demarais, and I'm the Global Forecasting Director at EIU. I'm joined today by Matt Sherwood, our Global Economist and Lead US Analyst. And today we're going to discuss a topic that is making the headlines, US inflation, focusing on the causes, consequences, and outlook for inflation in the US. So Matt, turning to you, what are the main causes of the inflation spike in the US?
Well, thanks, Agathe. The main reason inflation has spiked stems largely from global supply chain issues. The global semiconductor chip shortage, skyrocketing freight rates for global shipping, and port congestion are the main ones, really. And as the U.S. economy has entered into a strong recovery phase, which started in early 2021. Now, these factors were catalysts in the sharp rise in commodities prices last year, which led to sharp increases in producer prices and even retail energy prices for U.S. consumers. However, a year on, and these pressures are still with us.
Well, I thought the inflation spike was supposed to be temporary. So what does that mean for U.S. monetary policy, the Fed? All eyes on the Fed.
Yeah, you weren't the only one. Even the Federal Reserve, the U.S. Central Bank, was betting on inflation being transitory, to use their word. However, as the global economy continues to face supply chain issues, other inflationary pressures have been building in the U.S. economy. There are even signs that previous fiscal stimulus to stave off economic disaster during the pandemic may also be a factor. I mean, regardless of the causes, U.S. consumers are raising their expectations of future inflation, which has the Fed worried about a potential wage price spiral that results in inflation remaining permanently elevated and well above the Fed's target of around 2%. For perspective, the inflation right now is at 7%. So this is why you have the Fed signaling again this week its intentions to start raising interest rates sooner rather than later, and most likely beginning in March.
So with all that in mind, 7% for US inflation, that's really record high levels. What do you think that means for the outlook for US inflation and the Fed's policy?
Yeah. I'll start with the latter first, actually. We expect the Fed to raise rates by 25 basis points 4 times in 2022, most likely front-loaded mostly in the first half of the year, and then another 4 times in 2023, plus one more hike in early 2024. We also expect the Fed to start reducing its balance sheet, which doubled in size during the pandemic. This combination of Fed tightening and the gradual easing of global supply chain disruptions will result in U.S. inflation starting to fall in the second half of 2022 to levels more in line with Fed policy. That's our baseline forecast, at least. But I think we also have to highlight that the risks related to U.S. Fed tightening are on the rise, especially as bond yields begin to rise strongly and the Fed removes support from a global economy that has grown used to easy money. And that is likely to have implications, especially for emerging markets.
Thanks so much, Matt, for joining us today. And thanks so much to all of you for watching the video. See you next month. Stay safe. And in the meantime, you can always find our latest analysis on www.eiu.com. Thank you for joining. Goodbye.